Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. All right, good morning, everyone. As you can see, Joel Elconin has stepped away, but he'll be back. Spencer Israel, Dennis Dick here with you this morning. First off, everyone, before I even get started, just go ahead and hit that like button. It takes 2 seconds. It's the little thumbs up thing right there on YouTube. Just hit it real quick so I don't have to bug you about it ever again, or at least until tomorrow. It's earnings season. What can I say? Earnings, and more earnings. We had Google. We had Microsoft last night. We had AMD. We had Starbucks. We had Boeing this morning. Shopify, Spotify this morning. Tonight, Apple, Facebook. So we are in the thick of it now. We're going to cover as many of these as we can. We will also talk about Tesla, which had a 10Q out overnight. Some interesting things in there. He is. Welcome back, Joel. Our guest today, Gil Morales, author of the Gilmo Report, and runs the Virtue of Selfish Investing.com. He'll be on at 8:35. Let's go ahead and bring Joel's charts up and have him update us on how we're doing in the pre-market session. Mr. Joel, welcome back.
Yeah, sorry about that. Perry thinks Lisa's home because she was home this morning. And then Lisa left to go swimming. So Perry still thinks she's here. So she's just barking up a storm. So I took her upstairs, downstairs. So sorry about the interruption.
I thought maybe you were in the pool still. I don't know.
No. Now that Lisa's turn on Wednesday. So if I have to bolt, it's just because the Perry's making a lot of noise here. Nice range in the S&P, 10 points exactly. Whew. Boy, oh boy, look at that resistance up there. Forget about the intraday high from yesterday. Big number up top we got to clear. Currently trading down $1 at 41.78. Crude up 63 cents at 63.57. Gold repelling off 1,800, down 14.70 at 17.64.10. Silver, back under 26, down 53.5 cents at 25.91.5. And quiet range for Bitcoin, only a couple G's there. Up $35 at 54,825. Triple D. You got to go over the explanation once again on why Microsoft is down, because it's just, I want people to see the way you think and what you're processing in those moments after crazy earnings reports.
Okay, so one thing to understand is when you're open from 9:30 to 4 o'clock, it's very easy for the market-making algorithms to just quickly calculate where all 500 stocks of the S&P are, or all 100 stocks of the QQQ are, and then make a market around that price. Literally, because everything's opening, and look at the bids and the asks, and you can see where exactly the QQQ should be. Once you get past 4 o'clock, it becomes a different animal because it becomes a little bit more of a guessing game. You have active markets in Apple. You have active markets in some of the bigger names. But, half of the components don't have much of a market at all. I mean, it starts to get very wide when you start going, especially in the S&P and you get bottom 250. It starts to go wide. So it's a little bit more of a guessing game. So some HFT algos go right off. They don't want to trade after 4 o'clock because they can't get the calculation. There's other ones that are more aggressive that ballpark it. I ballpark it. I'm one of those that ballparks it. So you don't know exactly where the S&P and the QQQ should be relative to the 500 stocks because there's 300 that don't have much of a market. But they're smaller. You can kind of grab the top 10, which is 25%, right, Joel? Is it 25 or 30%?
Yep.
And it gives you an idea. You got a ballpark figure. So what happens is when you get one major company that reports like Google, that is significant. And in the Qs, in the S&P, I think it's about 3.9%, just going off the top of my head. Don't quote me on these numbers. And I think in the Qs, it's about 7.1. So it's significant. Google, that's adding both Google and Google together. So it's significant. So it's going to have an impact directly. Just that one stock is going to impact it when that stock gets a significant move. So last night, right after the bell, Google reports, blows it away. It immediately rallies 100 points, $100. So it's about 4.5%. It just pops, boom, 4.5%. Okay, SPY's QQQ's got to adjust. But again, you don't have as many high frequency traders online. You also have the, the guessing game. It doesn't adjust as quickly as it does at 359 or 358 when all the components are open. It adjusts a little bit slower. So, and because of the ballpark game, so you'll see a movement, but it's not in microseconds, it's in seconds. It's a little bit slower, it's delayed. So Google reports, goes up 100 points. What does that mean for the Qs? Well, if Google's up 100 points, which is roughly 4%, you take the 7.1% that it is of the Qs, it's roughly a $1.20 move in the Qs. So the Qs got to move up a $1.20 just to account for Google. Qs start trying to rally. They're up like 40 cents on the initial print, but they're not up enough. So they've got to, continue to go. What happens as the Qs are trying to adjust up is Microsoft reports. So Microsoft, drops it in 30 seconds after the Google report. They went bang, bang. So if you're an ARB, there's one of two things. You can keep trying to buy the QQs. The algos aren't, obviously, you're holding and juggling a lot of balls there. But the Microsoft report was pretty decent. The problem is that they want to rally Microsoft on it now. The QQQs are going to have to go even more because we got to go up $1.20 just to make up for Google because Google's here now and the Qs are here. So there's upward pressure on the Qs because of Google, but it needs to go a lot more. And if you put more upward pressure on a Microsoft good report, the Qs got to really explode. But the Qs have other offers out there. There's other, natural liquidity out there as well. So it's not going to get to that point as easy. So what is easier is just to turn around and slam Microsoft. And that's what happens. And we see this. I've talked about this, in the Q's tech components and non-tech components, which I have a full list. There's 21 non-tech components in the Q's. And you'll see on these big days where you got tech really ripping, the non-tech components of the Q's get hammered because it's trying to make up for the difference in the index. It all has to add up to, at 4 o'clock, or when the market opens at 9:30, it all has to add up. The numbers have to add up. So all I'm saying is the adjustment, it puts actually pressure on Microsoft. So two things happen. One, Google absolutely blew it away. Two is they announced a $50 billion buyback. So it's like Google is solid. So now immediate bar raise for Microsoft because Google really blew it away. And we know it's, they're all linked together. Microsoft, Apple, Google, Facebook, they all kind of track each other to a certain extent. So immediate bar raise, which Spinner was pointing out was already high for Microsoft. It was even higher 10 seconds after. And now it's even higher because of the ETF effects. So they naturally kind of want to hit Microsoft just because the Qs aren't up enough for Google yet. So they turn around and what do? They slam Microsoft and the Qs just come right back in. So that's the easiest, that's the market making mechanics and the ETF effects that are happening behind the scenes that the major media will never talk about because they don't understand it. One, they're not a market maker. I'm an after hours market maker. I trade this stuff. I trade the ETF effects. So I can tell you, I'm not guessing that this is happening. This happens. This is, what is actually happening behind the scenes. This is, what the algos are doing behind the scenes. Those QQQ non-tech components get slammed on a big tech day because of the ETF effects. Walmart, or you can get into different ones too. I don't want to take it away from it. But all I'm saying is that when you have two major S&P QQQ components that report at the exact same time, it's hard for them to both go in the actual same direction because it is so much push on the indexes and there's countering effects there. So Microsoft, a bit of a victim of Google's raised bar and the ETF effects.
And also you talk about the liquidity in stocks and stuff. Google, after hours is probably, a couple $1,000, 25, 24 high price stock. The liquidity is not there as much. Probably who else wants to sell it? Who wants that thing? And I thought about it, after it had it ripped, and then it came back and it was down less than 100. And when I got this morning, I'm like, man, I bet you Google's up over $100. Like, who is going to sell this thing? So great explanation there. And let's just take a look at these.
A lot of people don't believe that, and they don't want to believe that the ETFs have that much influence. I bet you if we asked him this question on Monday, I bet you he'll say, oh boy, you are right. There is a lot of ETF effects that are happening on stocks. They're all linked together because of ETFs. With the market that we were in 20 years ago, Joel, was much different because you had, mutual funds, closed-end funds. These weren't, they didn't have the creation redemption, mechanism that were coming in and out, where you can actually create the basket, then deliver it, to the issuer and, get the stock and get the index back. I mean, the creation redemption wasn't there 20 years ago. It was done, and obviously they still track, but it was more tracking error. It's not that way anymore. The tracking error is very minimal. So when you get these adjusted moves after hours, the indexes have to adjust to those prices. It all has to add up. So the ETF effects are real.
Google. I mean, we're trading right at the highs of the pre-market session, up almost $120. I'll just give you a high here, and it doesn't look like it's backing off yet. 24.32.54. I mean, that's it. But look at this. It's like it's bid at 24.20. We looked at Microsoft. I know I looked at the numbers before, and it did have a double bottom at 260 for the last two sessions. So it gets anywhere near 260. I think that's going to be big resistance. And the way this spiked down here, I don't think you're going to see this. I don't think you're going to get to see it as low as 251.39. So maybe a couple days of chop and slop between like 252 and 258, and then make its mind up which way it wants to go. New all-time high yesterday. Street leaning the wrong way into the report, and now just digesting the information.
So wait,
I mean, it was a great report, and you got multiple firms raising price targets here this morning. I'm fully long both of these stocks, Google and Microsoft. Google's one of the biggest positions. I've had it forever. I don't plan on getting rid of it. I mean, they're firing all cylinders. YouTube. Spencer, do you have anything to say specific on the specific report?
No.
That we missed?
Yeah, well, you mentioned the buyback from Google. I mean, YouTube is just a
monster.
It's because of us.
It is because of us. That's exactly right. YouTube revenue grew 50% year
What
over
a buy!
year.
What a buy that
Unbelievable.
was.
Unbelievable.
If YouTube was a separate company, where if they never got bought and they were traded publicly, how much valuation would YouTube trade at? I mean, you've got it's definitely better than a lot of other these publicly traded companies out there. Generating more revenue. I mean, what kind of valuation would it have? Just by itself, like, okay, just back out the YouTube. How much revenue did it get in the quarter?
$6 billion.
$6 billion in the quarter. So can we easily say probably 20 billion to 25 billion over the year just from YouTube revenue?
Yeah.
And
reasonable.
and growing substantially. If you give that like a 30 times sales, 30 billion, so 100 billion.
And they bought it for one.
100 billion. And that's a very conservative estimate. We know this market probably would trade at $200 billion, maybe just the YouTube component. I mean, they bought it for $1 billion. They paid $1 billion for YouTube. Is that right?
Yep.
They're geniuses over there, Google, man. Wow. So you got 1.5 trillion. I would gather to say that you could say if they had spun off YouTube, or if they decide to spin off, not that they're going to do that, why would they do that? But if it was still a private, if it was still its own company, I think it'd be worth $200 billion in this market, maybe more. You could maybe argue more, maybe $250 billion. That's a cool 20% of Google's market.
And you know what? The best thing is for them. How much do they spend on providing on content?
A fraction of everybody else.
Nothing. They have our content. Everyone provides content to them. They're not a Netflix. Free content.
No, I mean, they do spend a little bit. They have some originals. They spend
like what?
But they don't have to. If they decided they just didn't want to produce any content at all, YouTube would still be loaded with content.
Right, exactly.
It's just an awesome business. It's an awesome business. That they only paid $1 billion for that is just mind-boggling.
Yeah.
Like,
What
why
year was that?
not somebody else paying 1.5 billion for that or 2 billion for that? I mean, YouTube was cool right from the beginning.
Yep.
I mean, it really was. What year did they buy that?
It was 2014. No,
No, earlier than that.
No, it was 2006, and they paid 1.65 billion in
Holy
2006.
cow.
Yeah,
What
I know
a
it was a long
purchase,
time ago.
man. They just, and you think of them as a search engine, but they just, they just see, with the big picture, the people at Google. Unbelievable purchase. So unbelievable company. I love the company. I love the stock. I don't intend to sell it.
What happened to like Alphabet, like getting companies from every letter in the alphabet?
I don't understand why they changed their official name to Alphabet. That was one of the dumbest things they did. I don't know who was responsible for that. We all still call it Google. Does anybody call it Alphabet?
I don't know.
Is it still officially called Alphabet? I bring it up on my ticker screen. It says Alphabet. Yeah, so I must still be officially Alphabet, but I don't think anybody calls it Alphabet.
That's the name of the company, and the thinking was that Google is a product.
And they wanted to get away from that.
Right. They
didn't want it to be associated just with search. They're everything. They're like everything in the alphabet.
Exactly.
I get the thinking behind it. It's just a dumb name.
I just don't get it.
Yeah. Whatever. The question, though, if we can go back to the Google Microsoft discussion for a moment, is okay. So you explained the reason for the after hours move. Mm-hmm. What does that tell you, though, about the open today and how things could shake out at 9:30? Because that was brought up in the chat.
Yeah, so it depends on the indexes, obviously, as well. Like right now, we're completely flat on SPY, and SPY is maybe not the best example. QQQ is probably a better example because they're both bigger components in the Qs. So, and Qs are actively traded too. So, and the Qs are trading down because of Microsoft. I mean, if you want to back out both, a cleaner way to look at it too is to look at. I had a trader ask me, why is DIA down? Well, so SPY has Google helping out. Qs has Google helping out. DIA doesn't have Google helping out, and they all have Microsoft. So that's why you can clearly see, the market down just because of Microsoft. Again, is it just the differences of knowing the holdings of the ETFs. So it's difficult to extrapolate. It's difficult once you've traded for a number of hours. It's hard for Microsoft to just bounce. You've now had the media dump on it and saying, "Oh, this is why the expectations were too high." There's a plethora of fundamental reasons. Like I have reporters call me every once in a while. If I started talking to them about ETF effects, their eyes would just kind of start to close, and they don't want to. They are not going to understand it, so they're not going to write about it. And then two is it's boring. They don't want to hear market making effects. And it doesn't sound like it can be possible. It sounds like, well, that's just stupid. That's not possible. It's not possible that, and the cleanest example that I've given on this show lots of times is looking at those non-tech QQQ components, which will come into play tonight. So on the big earnings tech days, when you have Apple and Facebook reporting on the same day. So this is actually a good exercise, just so, some people can learn. But let's just go back to the SPY. And I know I went away from your original question, Spencer. My real answer is Microsoft is kind of where it wants to be because of those ETF effects.
You can tell.
It's kind of where it wants to be. It's going to have a difficult time just bouncing back because the media dumped on it.
It's going to have a hard time going down too. It's going to have a hard time going down too.
But if we look at SPY, Apple is 6% and Facebook's only 2%. So that's 8% in two companies. So what you'll see is if, an Apple is significant in the Qs, I was going to the Qs. I brought up SPY. I wanted to bring up the Qs. So Qs, Apple's 11%, very significant. Facebook is also a big chunk, not nearly as big, but Facebook is currently about 3.6%. So Apple being 11% of the index, it's going to have a huge influence on the Qs. And sometimes the Qs just can't push it enough. So what do? They'll go to those non-tech components and they start slamming those because people don't even realize Pepsi is in the Qs. Costco is in the Qs. Comcast, which is, kind of techy, but not really trade with the tech stocks, is in the Qs. Mondelez, MDL Zebra in the Qs. Gilead in the Qs. CSX, there's a rail in the Qs. People don't know that. These are your non-tech QQQ components. I think there's 21 or 22 of them that, and you can say some are kind of techy, some are not techy. So, you can roughly say 20% of the index is really not tech. So when you get Apple rallying hard, and then you get other tech stocks up in sympathy with Apple, it's going to push the Qs. And if the Qs can't get it up enough just after hours, they start hitting the non-tech components. WBA, I believe Walgreens Boots is still in the Qs, which is a weird one to think about, but it isn't. It wasn't there.
Yeah.
I don't know who makes these things up. Kraft Heinz is in the Qs. Kraft Heinz is in the Qs. KHC.
Yeah,
that's in the Qs. All those stocks will get hit when you see a significant rally in Apple after hours. So, if you called up the CEO of Kraft Heinz and the stock falls, let's say the stock falls, let's say Apple blows away. Just hype. I'm not saying Apple's going to blow it away. I'm just giving you scenario analysis. Apple blows it away. It's going up significantly. You'll likely see put pressure on the Qs, MNST, all the non-tech components, Keurig, Dr. Pepper's in there. And the media will say, oh, it's rotation. But it's actually ETF effects. It's not rotation. It's ETF effects, because the Qs need to have something going down. They can't have everything going up, because it's probably not going to be able to push up enough if Apple and all tech is up. So you'll see those non-tech components go down. So there's a trade to be made there, and you see it in the algorithms that a lot of times when Apple blows it away, there'll be pressure on those non-tech components. And there's it's a tradable event for those. Now, you could get caught up in the whipsaw. Apple might rally on the initial print and then start tanking, and then that trade would go the other way. But just know those stocks typically move in the opposite direction on these big earnings days.
All right. Excellent explanation there. And we've talked, this is a topic we've covered before, when the markets were out of whack, during last March and April. There was you came up with some real good scenarios.
I make money from this stuff.
Yeah.
So I'm telling you how I make money. I don't make money looking at I think on the chart it's breaking out and there's a cup and handle and I think it's going to go. I make $0 from that. I make $0 from pattern recognition. I make dollars from trends, knowing which stocks are strong and which stocks are weak. So that's where I feel like technical analysis is good. But, looking at the patterns, I'm not sitting there. And just, fun, when I first started Bright Trading, because everybody that starts retail looks at charts, right, Joel? Everybody, that's where you start.
It's
the easiest place to start.
Yep.
So when I started Bright Trading in 1999, I came in and we had First Alert. And you could do patterns. You could do filters for patterns on the charts. So it literally could type in cup and handle, and it'll show you all the charts that are showing cup and handles. And I would buy all the ones that had cup and handles because I read these technical analysis books, and these cup and handle patterns, they go up. And I would buy all of these. How much money did I make in my first 6 months of trading? I lost money in my first 6 months of trading. What did I learn in my first 6 months of trading? Cup and handles don't work. That doesn't work. Maybe it works long term. Maybe.
Do you still have First Alert? Do you still have that?
No, it's done now. First Alert's gone.
They kicked you off.
They're NeoVest now. NeoVest still has their legacy product, NeoVest it's called, but First Alert is gone. I know I was one of the last people on First Alert. I loved it. But not for the pattern recognition. I loved it for the other filters.
Filters, yep.
But if you really think that you're going to get an edge from just looking at just a chart, there's 6 million other people doing that. Is that a real edge? You think you're going to look at that chart differently than the other 6 million people? It's a tool. It's one tool in your toolbox. And I know we have a lot of people out there that say, all you need is technical analysis. I've seen hundreds of traders go through Bright Trading. I've never seen one trader long-term successful just using and day trading, not talking, but day trading. Just using charts and that's it. It's difficult. You got to have other, all of our successful traders, all of the day traders that are successful are all relationship based. Knowing relationships, understanding that if this does this, then this will happen to this stock. Huge edges in relationships. Talking about just a chart though, it's tough to get an edge. And by all means, if you're making money using charts and that's it, keep doing it. Keep doing it. I'm not telling you not to do it. But if you're just starting, you're trying to find an edge and you don't get why, I've got this cup and handle pattern and the stock went down. I think it's 50-50 on those. I don't think you're getting huge edges. Now, again, a stock in an uptrend, trends tend to hold. Like I say, I teach my technical analysis in 30 seconds. Do it right now. Support, resistance, and trends. That's it. No patterns, no moving averages, no death crosses, no golden crosses. That is all junk in my opinion. Support, resistance, and trends. Know if your stock is strong, know if it is weak, and that's pretty much the bulk of it. So I look at my chart. I take a 1 second analysis. This is a strong stock. This is a weak stock. I buy dips on strong stocks. I sell rips on weak stocks. That is how I do my technical analysis.
Through
I've learned it from you, Joel.
retracements.
I've learned it from you. We like the fibs. You know, we do like the 50% retracement. So we do like that too. But you keep your analysis very simple too when Joel does it. He loves his support and resistance as well.
Yep. No, that's a great explanation. Should we move on to AMD? I mean, this is...
Somebody's saying VWAP. VWAP is really just fib retracements to a certain extent too, though.
Reversion.
I mean, it is. It's mean reverse. So if you're looking at the VWAP's following, but, you know, you're always looking at pulling back. So Kenny, you know, is doing VWAP. It's kind of like looking at the pullbacks, buying, you know, back when it pulls back. So you're looking at those retracements too. So it's kind of in there. I mean, it's a natural retracement strategy. So it kind of falls in that. So I'm not poo-pooing on Kenny's stuff at all. I'm saying it's kind of just like a retracement strategy there as well. You're looking at it pulling back. But this isn't a technical analysis show. This is an everything show. So we like to talk news too. So
everything.
I've been talking
everything's
forever.
Incorporated. Yep.
I just
sentiment.
I just want to say, honestly, the last 20 minutes or so have been like 20 of the best minutes of content that we've had all year. I think on this show, guys, just and I say this a lot, but that was amazing. Okay, if you got any value out of that, who's calling me right now? If you got any value out of that, hit the like button. Seriously, just do it. That was pure gold that Dennis and Joel just dropped.
Everyone would love the pre-market show because it Dennis, you can tell what's thinking, what he's going to do, and then I just set him up, and he just, boom, hits it out of the park on that one. I don't want to get him talking about transitory yet, though. Maybe we should do
That's the word of the day. We got to get into that.
I don't want to.
We keep going the earnings for a bit. We'll come to transitory and doggy coin pretty soon.
All right. We talked. What do we talk? We talked Google, Microsoft. You want to talk AMD?
Sure.
Yeah. All right. So they were also out last night. EPS beat, sales beat, guidance above estimates. Q2 sales guidance above estimates.
Why would someone slam this down to 85 on that report?
I don't think they did. Did they? Did it go down originally?
Yeah.
It closed at 85 though, Joel.
What am I looking at here?
It went straight up from the report, pretty much.
It did.
It might have. I'm pretty sure. Like it was.
Oh, you know what? It went up and then it went down and then it came back up.
Chopped a little bit. It was pretty fast because I traded this one. AMD, it ripped higher to $3 and it maybe hesitated there for a second. I was like, AMD's ripping. I immediately hit the Intel bid. I hit the Intel. I shorted Intel. Oh, evil Dennis shorting stocks again. INTC. I shorted, I think 57, 80. I multiple spots. 85, 90. I'm immediately, and that's relationship based. I'm like, if they're going to buy the hell out of AMD, they're going to hit Intel. And it's down 50 cents. I'm already out of the trade, so I can just clearly talk about it, not talking my book at all because I'm already out of it. But this is what you do. I mean, this is relationship based. AMD up, Intel down. Just basic market, just basic relationships. They are moving in opposite directions. They have been doing it for a while. They used to move together sometimes on the reports. They haven't been doing that for 2 years. AMD goes up, Intel goes down, Intel goes up, AMD goes down. That's just the way that they've been moving lately. So understanding those relationships. But yeah, AMD is back.
Apparently. It is. It's a strong report. I mean, it had the support. It's a clean breakout here. Maybe let's look for $90 here. The pre-market high 89.90, and then that high just over 90 at 90.42. So keep an eye on that. Just another potential target on the upside. Could be some size there. We haven't been up near 90 in a while. So that's what I'd be looking for on the upside. On the downside, it looked like since 4 a.m., you have buyers at 88. So 88 to 90, currently trading at 88.77.
I think the person who was calling me may have been our guest, Gil Morales, who will be on with us in 5 minutes.
With that, Gil is awesome.
Yeah, Gil was the man.
Yeah. Is he okay?
Yeah, I think so. He emailed me. I gave him the wrong link. So, yeah. So Gil's great. Gil's site is the Virtue of selfishinvesting.com. He'll be on the 5, and his strategy is also fantastic. So we'll talk to Gil in a few minutes.
Gil's got some great strategies.
Yeah.
He actually is one of the people that looks at the charts different than the other 6 million people. Him and Jeremy Newsom have their own spins, and they look at the charts because they say, oh, this is the textbook, so this is why it's going to go the opposite way. They'll cut through and rally, Gil Morales, and that thing works, man. And that doesn't always work, because then some people start playing it and then it stops working. But Gil's always ahead of it. Nobody knows the charts better than Gil. I love Gil's analysis. Coming up.
All right, let's talk. Oh, guys, I don't even know where you want to go. Where do you want to go? You want to go to like Starbucks? You want to go to Boeing, Spotify, Shopify?
Holy mackerel.
Yeah. Let's just get, let's stick with the tech. Stick with the tech, and,
sure.
and we'll go to Shopify here. They were out this morning. EPS. Oh my God. Is that number adjusted? Their EPS was $2.01 versus 73-cent estimate. Is that right? Sales,
yeah, Shopify is just kicking butt and
sales
taking
of
names.
$988 versus $865 million. So a huge beat and a beat for the first quarter.
It's one of the worst sales that I've ever made. I'm so mad. I bought this stock, and I was on this show preaching this from $300.
Canadian.
I bought it at $300. And I said I think it's eventually $1,000 stock. And I preached that and preached that and preached that last year. For whatever reason, I thought I could time it. I sold it at $650, and I was like, oh, it's going to pull back. And it actually did. I actually went short the stock and made 50 points. Remember that? I had the Shopify. Actually, I flipped it. I sold it, and I actually went short. I made money on it, but I didn't get back long. So that's the problem when you sell these things. You pay the tax bill, and if you don't get your stock back, and here I was preaching to 1,000. I traded it in there, but I never put it back in the investment account. Huge mistake. Should never have sold my shares. Regret it. I'll regret that one forever. Shopify, awesome company.
We hit 12:30 in the pre-market and just kind of stalling here, but I just can't get this 1250. Look at this area right here. 2 highs here, one just under that. The retracements right there. Boom. I mean, that's what you want. You want to take back. Hasn't taken back half of this move yet. Get back over, hold 1250, consolidate, maybe make a run at the all-time high, but still hasn't got back half of that, half of the losses from that big decline from 1,500 to almost 1,000. 1250 right there. You got to keep a close eye on that one. If you get a retreat, you're trying to buy this thing on a pullback, pair of highs. Let's see, where are we at? We're at 1218. I don't think you're going to get a chance to see this at 1170 today, but maybe if one big seller comes in, that's the top of the range from 2 days. So that's what I'm giving you, folks.
What about, I'm looking for like the biggest movers here. What about Pinterest, which is down, what is it? Down?
Ooh,
yeah.
10% this morning, give or take. What is it? Yeah, a lot more, 11% actually. They were out last night as well. EPS beat, sales beat, didn't look into the report enough to try to provide more context. But
Kramer was saying some stuff, and I didn't read the report either, so just taking it from Mad Money last night. They take our content. We might as well take some of theirs too, but at least we credit them for it.
Could you say that faster?
Anyways, he was saying that they basically were saying in this quarter that they don't know if it's going to continue to be as good as it was. It was like a perfect scenario for them with growing the users with the lockdown. So, and I get that too. Where Pinterest and a lot of these social media platforms have been operating in an environment where we're all sitting at home. We have nothing else to do. Let's go on Pinterest and just dream, and look at these pictures of this and this and this and this because we're sitting at home and we're bored. And now that we're coming out of, if Ontario ever comes out of lockdown, but now that we're coming, we appear to be getting, back, not to normal yet, but on our way back to normal, that people are going to be getting out doing different things. We're not to be sitting at home doing the, mindless scroll that Gene Munster calls it as we just scroll through, our Twitter feeds and our Pinterest feeds and our Snapchats and the mindless scroll. There's going to be less of that. Pinterest kind of, talked about that to a certain extent, I guess, in the report. Not the mindless scroll, none of that stuff.
Confusing as hell.
Words.
Confusing. Are you on? No. Have you been on their? Do you go on their site? Do you have their account?
Never. My wife goes on it because this is where she got all the ideas for our house.
I know.
She's the engineer behind the house. So she looks at 100. She pins 100 pictures of hardwood floor. She picks 100 pictures of stone. She picks 100 pictures of, whatever else, And now the prices have gone up. I don't want to do any of it, but that's a whole nother side story. And we obviously are still doing it because the bulldozer is coming. Down 11%. I mean, the question was this environment as good as it gets for Pinterest? That's what I'm basically, and there's an argument to be made there for sure. And that's what Jim was arguing last night. It's good points.
Someone wants to sing around 68, and they're not paying 69. They're not paying 69.5. They're just very patient here. They were buying some stock above 69, got hit. Now they're just back at the $68 area. So it's fine. I mean, if you want to take a shot off this thing, there was buyers at 68. Maybe it's someone that just has some puts or something, and they're just trying to lock it in and, trade the stock from both sides. But man, oh man. And I'm not seeing much on the dailies here. Well, you know what? 67.53, 68.32. So the splits the lows from the 29th and 30th. I mean, if you want to look for more on the downside, 66.82 would be the next low. But just smart accumulate, just sitting here on the bid, just take it in, not chasing it. They don't care where it goes today. They care, but they have enough to buy, and their area is 68. So there it is.
Is this a Kathy stock, Spencer?
Pinterest? Yeah.
Does she own a bunch of Pinterest?
Yeah.
Well, she's going to be buying. You're probably a pretty good guess that she'll be buying Pinterest. So, obviously, the Kathy would. People think, okay, well, she'll buy. So we'll see towards the end of the day if that has. That
could be Kathy out there right now.
It could be Kathy. She likes to buy. She loves to listen to the show. Buy the dip.
It looks like the last time she bought Pinterest, it's been a while.
No,
I haven't called it pin interest.
I wouldn't be surprised she buys some today.
It's been like a month since she's bought Pinterest. All right. Anyway,
she loves 11% dips. She loves buying the dip.
Let's get our guest here on now. He's extremely close to his camera, and I like it. Gil Morales.
Oh, nice.
Gilmo report. Gil.
Oh, there you are.
Hey, up close and personal.
Up close.
How you doing? I just want to send the love back to Dennis. I heard his comments earlier. I love your discussion on the effect of ETFs on the market, and it is real. It's true. I mean, that's what drives the market to a large extent, and that's why I posted my famous release the algos graphic on my Twitter page. So you guys might want to go check that out at Gilmore Report.
Show that.
I'm gonna get it right now.
We might show.
Guaranteed to be entertaining. That's what I strive for. In any case,
us too.
So what's going on? It's like may the froth be with you. I hope it is. I don't know if you got any froth now because all the FOMO stuff blew up back in February, and some of it's trying to come up off the lows like that. What's that? Microvision. I'll tell you what ticks me off. I saw the undercut and rally on that puppy. It was like 6 days ago. I saw it right off the lows of that base, and the base is hanging above the prior base. And I thought Dennis made a great point about technicals. Yeah, the old stuff, it doesn't work. You have to think a little more creatively. You also have to think about context as well. That's very important. Some people want to say, oh, look, it's a cup with handle, and they get all what I call pattern happy, But that one posted an undercut and rally and a pocket pivot right at the lows at $12.
Did you draw that, Gil?
Yeah, I did. I used to be a cartoonist, believe it or not. You can go on Amazon.com and find my old cartoon books. And I actually was set to become the next Doonesbury right out of college. I had published a book with Ballantine Books in New York, which I think has since been bought up, Random House. Wow. And my comic strip was being shopped around by the major syndicates, and it only got into 13 newspapers to start out with. And the syndicates told me that wasn't good enough, so they canceled me. They blew it off or blew me off. And the interesting thing is that Doonesbury, when he started in 9 newspapers. So, when they told me 13 newspapers, I'm thinking, oh boy, I hit the mother lode. And at that point, though, the comic business had become pretty big, and the biggest aspect of it was the merchandising, You get plush Garfield toys and stuff like that. And so, I started my life as a cartoonist. And I actually tried to become a professional cartoonist. And then I realized that wasn't working, became a graphic artist, then realized that graphic artists don't make money. And that's when I got into this business where you can make a lot of money sitting on your butt in front of a computer, Where else can you do that? What a great country, huh? Anyway,
that's
so
good. He can draw. This guy can
That was
draw.
incredible. I mean,
I
Dennis,
know.
me and you with our we won't go into our
Yeah, me and Joel
stories,
failed
yeah.
yeah,
grade 3
but I
art.
can only draw that well after like 2 or 3 martinis. So I don't know why that is. But
Relax
No,
on
man.
your muscles.
So Gil, so the next question though is you're getting into the NFT game, obviously, right?
I'm sorry, what's that?
You're getting into the
NFT?
yeah.
Well, my partner Chris Ketcher is pretty much an expert in cryptocurrency and blockchain, and of course NFT kind of falls into that. So I mean, we think it's a key new technology. I mean, you look at Playboy Group. You know, everybody's got a Woody for that one, don't they? No pun intended.
I don't even want to
Intended.
start with the puns on that one, man. I don't even. Every time
That was a good one.
Come on,
My wife will tell you I have a
That was a good
very,
one.
very dirty mind. So in any case,
It makes sense though with Playboy. I mean, I think that they're
yeah, it does. But
it
another
makes
one is
huge-
Funko. Look at Funko. You know, that one, I was talking about that one last November. I didn't know they were going to get into this NFT thing. I just love Funko because I'm a Funkophiliac. I hope that's not a dirty word, but essentially at $7, it turned off the lows. You had a little undercut and rally and a shakeout down there in the base, and I think there's a couple of pocket pivots down around $7. This was last November, and look at the thing now; it's tripled, and it's hanging along the 10-day to 20-day. They're also an NFT play, but you know, a lot of this is FOMO, and I think you have a big move like that MVIS the other day. You know, that thing went up from what, 12 to 28, $30, something like that in 5-6 days. And now it's coming back the other way. So
yeah,
you know,
that one yesterday.
FOMO in, FOMO out. You know, that's and you play it. If you can play it, you know, you play it.
If you're good,
I don't discriminate, you know, against stocks either way. You know, short Tesla after the earnings, that's working, coming down a little bit more today. We'll see where that goes. Great shorts 2 weeks ago in the Bitcoin miners when the Coinbase IPO came out, and my business partner, Dr. Ketcher, Chris Ketcher, he doesn't like Coinbase as an exchange. He thinks Binance is a superior exchange and that Coinbase is probably overvalued, like that matters in this market. But he thinks it's more like a $150 stock. So we'll see where that goes. But I know Arc Lady keeps buying it. And it comes down and she buys some more.
I've never heard her call that.
And it comes down and she buys some more, you know, and it's kind of like watching a kid trade, you know, oh, it's down under $10, let's buy it. And then we'll announce it. So the next morning it gaps up $10 and then it goes lower again. So we'll see where that goes. But, you know, I mean, a lot of this is like what I saw in 2000, to be quite honest.
I was just going to ask you that. Where are we in this cycle, Gil?
Who knows? I don't, you know, it's like 2000. I see a lot of parallels. I see in terms of the bubbles and in terms of the hot money managers who are now considered geniuses when they don't realize they just got lucky. You know, Gordon Gekko put it very well when he said a fool and his money are lucky enough to get together in the first place, right? And I think that's what happens. They don't realize it. Just like 2000, and all these money managers kept buying these stocks come down, the .coms, because, you know, it's the future. And they're disruptors. I guess that's a new word. If you can call something a disruptor, it's good for 500 points, I guess, of upside. But
we're disruptors.
We love Gil.
And then you have the retail investors who are just these sort of taunting schoolyard children, you know, and they all think they have these magical powers. I mean, I get it from time to time. You know, they come on my Twitter page or some idiot will email me and you're a fraud and I told all my Robinhood buddies about you. It's like, yeah, sure, whatever. You know, I bought this house, which is worth over a couple million with money I made in the market. So I guess I am a fraud, but whatever. I don't care. You know, you can say whatever
real.
you want.
Gil is a real
I've been
trader.
around the
We know
sun
that.
61 times, baby. So people like say I've been around the block a few times. I've been around the sun 61 times. Feel better than I ever had, and you know, I don't really care at this point. I'm just having fun. But if we can make some money, why not? You know. But where do you make money now? I think this market is mostly about swing trading. It's very tough. You even look at like Google, which I still call Google too, Dennis. And I think the name Alphabet is kind of dumb, but whatever. Yeah. And I would note, founded by guys from my alma mater, Stanford, the greatest school on the planet in the history of mankind.
Oh, Joel, fight on that one.
That's my Trump.
You couldn't get in Michigan.
Why would I want to get into Michigan? I couldn't get. If I got in there, I would want to get out.
Because of the weather?
You went to Michigan? You know what? It doesn't really matter where you went to school, to be honest with you.
It's what you learn when you're out of school.
It's what you do with what you learn. I know a lot of people went to Stanford and they didn't do anything. You know, some of them are dead because they kind of overdid it with the drugs and the alcohol. But, you know, that's what that's all about. So let's not get hung up on that. But essentially, this market to me is a swing trading market. You got to take the setups as they come, long or short, and there are enough, to make some money, but it's hard. And you don't know whether you have something that's a one-day wonder trade or it's going to do something over 4 or 5 days like that Microvision, or what is the name of the company? I only know things by their symbols. That's kind of the world I live in. MVIS.
Yeah.
And let's see. Let's pull that chart up.
I mean,
Yes,
you're making such a good point here, though, and it has been. We had a pretty easy time as a retail. Just buying some of these stocks back in December, January, even back to November, where the stocks were going up and up and up. It seemed like forever. Now it's like they get a few days rally and then they get a few days sell off, and we're just kind of. It's been a lot harder to be like a trend follower following along here. You think, okay, yeah, we're turning around here. It's a breaking out, and then it doesn't break out. It's been a trickier market here in the last month.
Oh, definitely. And I think you have to be a little more creative. And the other thing is you were pointing out with the chart reading and stuff, it is a little bit like tea leaves. But I think when you're looking at a chart, I always think about the book, One Good Trade and Trade the Trader. You have to think about, okay, who else is looking at this chart?
Yeah.
What are they thinking? What are they doing? And you made that point that everybody's looking at charts. And that's why I don't think breakouts work anymore. That's why undercut and rally setups tend to work better, although I've noticed some of them are not working as well lately. Like, look at something like a MARA or a Riot. Those are stocks that were shorts exactly 2 weeks ago. And I tweeted about them, and then, of course, here comes the Robinhood crowd. Oh, see you at 100,000. It's like, well, maybe. But, first I'm going to play this thing on the downside for $40 because the idea is these stocks will go higher if Bitcoin goes to 100,000. And Bitcoin, I also tweeted, was probably a short just above 60 because it looked a bit too obvious, and that was a breakout. So everybody sees sees a breakout in Bitcoin, but I'm looking at it a different way because I'm thinking about, okay, what is everybody else thinking here? Mm-hmm. Where has this thing been? Where did we first start buying this thing, which is around 3,000 or so a while ago, and then the GBTC around $10, I think, back in November. So at this point, this is stale stuff to us, but everybody else is getting excited. I listened to the goofballs on Fox Business News talking about it. Oh, no, we're going to get the pullback, and I can buy it finally. It's like, now? I mean, if all these people suddenly want to buy it, and everybody else is convinced it's going to 100,000, I tend to think it's going to fake people out first. It may get there, and I'm not biased, against it and thinking, it's a fraud or whatever. It will do what it's going to do, and it's a great trading vehicle. But you could kind of put one and one and one together and see what was going on. You had all the hype on Coinbase, which my partner Chris Catcher says kind of a little more hype than anything else at these prices. And you can see that the failure in stocks like Mara and Riot, which had already climaxed back, especially Riot back in February, if you look at the chart.
Yeah,
and so, you put that together, they triggered on my 620 charts that day, reverse. They're down 40% in 5 days. If you can get something like that in this market, then that's what you wait for. Otherwise, you're kind of chipping away at stuff. And, the Google move this morning is nice, but it's really only 5%. Microsoft down. What else? Shopify, that's a better move. What is it, like 6, 7, 8%? AMD is up a couple of percent. I'm looking at Tesla.
Do you like to trade stocks on earnings days? Or do you like to trade it before?
Earnings season is my favorite season of the year, and it comes 4 times a year, which makes it even more exciting. And you get a lot of high velocity, high time value price movement that you can trade. And when you have an environment like you do right now, where things are mostly trendless, right? Then that's what you look for, and those are catalysts. And so if I'm looking for earnings as a catalyst, I'm also looking for hypey news events like the Coinbase IPO, which was a catalyst for a short, as it turned out. Could have been a catalyst for a long, but that's not how it worked out. And I just play it, as it lies. I try to clear my head. We meditate every day, and get our head cleared out, and just look at the charts, play the charts as they lie, as I like to say. It's a golf term.
Is there any? Is there any potential shorts out there you're looking at?
Well, I was looking for the problem right now, Joel, is that a lot of stocks are going to report earnings. So I'm looking at the things that haven't reported earnings. If you look at Disney, Disney was a short at the 50-day last week. It stalled there a couple of times. And now you're down below the 10-day and the 20-day. Yesterday and the day before, you tried to rally into the 20-day line, and you stalled. And so that looks like a potential, follow-on short if you entered up near 189.29 at the 50-day line. But, it's not. How much are you really going to make here? Is it going to be high velocity? So a lot of stuff, it's really, you're just humping it, and you feel like sometimes it's not doing anything. And that's the way this market is. And I tell people, look, if you're having trouble and you feel like the market is just tough and you're, trying to walk through mud, then just stay out. That's okay. You don't have to come up with a stock idea every day. I like to come up with some, but sometimes I'm pushing it, and I'll end up losing money on a day when I probably should have been doing nothing, but I'm kind of manic. At this point in my career, it doesn't matter if I make money or lose money. So I'm just having fun. And I think that helps me stay objective as well, because I don't really have, I think people get a little nutty when money's on the line, it can affect your psychology. So, which reminds me, there's a great book I think everyone should read. It was published in 2012, I think. And I think it's called The Hour Between the Dog and the Wolf. And the guy actually studied your body chemical reaction, serotonin, adrenaline, et cetera, testosterone, and how that affects your trading. And I think to develop an awareness of how your body's feeling and the chemicals coursing through it that might make you do stupid things is useful knowledge. I find myself, okay, if I catch something like a riot and you make 40% in 4 or 5 days, the adrenaline's just, flowing everywhere. Serotonin is everywhere. And I'm just, going nuts. I'm excited, and I want to just start shorting everything, and then I'll do something stupid. And so if you start to recognize your own physiology, I think to some extent that's helpful. And for me, that's kind of the next level in terms of understanding myself as a trader and understanding the markets as a trader and how the markets can affect your psychology on a biochemical or physiological basis. Very interesting stuff. Book I highly recommend.
You can follow more of Gil's stuff. He's on Twitter. By the way, I love this. Gil has 11,000 followers and is following nobody.
Because I don't want to be biased or be influenced by anybody else. But there are some good people out there. Don't get me wrong. There are a lot of good people. And if I was not who I am, which is the amazing Gilmo, right? There's a number of people. Yeah, that's all BS. Don't fall for that one. It's like, I told my wife the other day, hey, I've got 10,800 followers on Twitter. And she's like, yeah, well, they don't know you like I do. Here, take out the garbage. Dennis probably knows how that one goes. And so, but think about that. Your wife can be a grounding force for you. So as I say, be grateful for the grounding forces in your life, because they'll keep you from walking over the edge sometimes. And a good wife, a good partner in life is definitely a big asset in that regard. So what was the question?
No, I was just talking about your Twitter. You can learn more. Read
Gil's on a roll.
You can read
good,
Gil.
Man.
And just to let you know, it's what 3 hours difference, right? 6 o'clock in the morning out there. I mean, I'd hate to see this like noon, man. You just must be firing.
I wake up at 3 o'clock in the morning, and I can't go back to sleep. And at my age, I guess I don't need to sleep. But that's fine. So let's get up and have some fun, and that's really what it's all about. When it's no longer fun, then I'll stop. But right now I'm having a ball, and we live in wild times. I mean, to be able to sit in the middle of it, right, you guys, and just see all this stuff swirling around you every day, it's pretty interesting. And I think you have to embrace it, as what it is, and enjoy it and have a good time, maybe not worry so much about whether the market's your friend or not, because I don't know if it's many people's friend. And we may wake up one day and see that you've got 10 Archegos out there. You guys remember Archegos, right?
Oh, yeah.
And they're all, 20 to 1 leverage, and it's all going to get unwound in 2 days, and it's going to be a brutal downside break. And my tendency is to think that when this thing finally does top, that's how it's going to top. It's going to pull the rug out on everybody. And so if I'm long anything, I've always got a little UVXY position back there in the sort of superstitious belief that it will hedge me. So we'll see how that all works out.
All right.
Anyways.
Gil, you can read more of Gil's stuff, selfishinvesting.com.
And GilmoReport.com.
And GilmoReport.com. That's right. He's on Twitter at GilmoReport. Gil, always a pleasure. Thanks for joining us. My
pleasure.
You brought some character to the show today. So thank you.
Well, you guys do a pretty good job yourself. I love you guys. I think you have a great show. Everybody should watch it, as far as I'm concerned.
Thanks, Gil.
All right.
Thanks, Gil. Talk to you soon.
All right. Always fun to talk to him.
Oh, yeah, really good.
Yeah. All right. 8:50.
Wow, someone as good at sense of humor as me. I mean, it's hard to come across. He's funny.
Oh, yeah, he's good today. He's on a roll, man. Arc Lady. I think I'm going to call her Arc Lady. I like that. Arc Lady.
His comeback to Joel's Michigan thing was top tier.
Yeah, pretty good.
Let's talk. We mentioned MVIS. Let's just pull up the chart there for a second, because
I saw so many people trying to buy this thing yesterday, and Dennis, was there an easy borrow on this one? Did you trade this yesterday? because you had the.
I doubt the borrow is easy. It was high. It's high. They're probably not an easy borrow. I go.
What
see
time do you think this thing peaked? And of all of all the times, the highest price. When do you think that was made? Going from the 4 a.m. open to the close.
Probably 4 a.m.
Yeah, and the bar be up. It opened
right at 4 a.m.
31.01. Then it hit 31.14.
Yeah.
And that was between, I just looked at it on the 60-minute, but I looked at it yesterday and on the shorter term. And boom, right there. Then it just, and this is the start of the regular session. And I saw so many people, I'll buy it at 24. Yeah, I'm buying it at 23. I'll buy it at 22.
You think it's already topped out? Yeah.
Well, yeah, today is going to be an interesting day because almost matching ranges on the day session. There's a lot of people like, oh, man, if this gets back to 23, oh, I'm out. So if you're expecting a rip back up, double top, 29 or 27.80, 28.
Trouble getting there.
The Reddit guys, you got some work to do, buddy. Get out there and bid this thing because there's going to be some offers out there.
Yeah, I agree. I mean, you have an ugly candle like that, you now have people caught, people who were buying yesterday. So you get the little relief pop. Kramer was talking about it last night. Actually, it was down, and then Kramer tweeted out basically that he was going to be talking about MVIS on Mad Money, and the stock popped $1.50 in seconds after that tweet. It's amazing what a tweet can do. He talked about it a bit last night, but he didn't really make a call either direction. He was just saying, it's at high short interest, so there's a potential for a squeeze, which is what we were seeing. And obviously Reddit name, so it's very influenced by Reddit, very influenced by social media, which we saw just from one Jim Cramer tweet last night. Tough stock to trade. This is,
almost filled the gap too. It almost filled the gap because it had a 1914 high, and then on Monday, 1975. And then yesterday they hit it. It got within a nickel of that gap. So I mean, if you're still super bullish this thing, you got a pair of lows at just let's call it 1940. That's the level. Just after that, what happens if you get into that other bar? You get into that bar from Friday. You're gonna sit on this thing till 15? I don't know, but we'll see.
I don't think it'll get straight down to 15 because you now have people who are the other way. I think it kind of did what it wanted. It shook out pretty good yesterday. I would just say yesterday's low is critical, 1919. Yep. Remember the undercut and rally that Gil Morales just talked about too. Sometimes you see, it gets just slightly below yesterday's low, and people are like, oh, it's making new lows from yesterday, and then they sell, and then they turn around and rip it. So I mean, this is a tough one though. This thing's wild. It's social media influenced. Somebody could say something and then pop it. We have the Kramer pop going right now, literally still from last night. The Kramer bounce back. It's up 10% because Jim Cramer gave it a little love on Twitter. So it's tough to trade these ones. They're so influenced by social media.
I didn't realize MVIS in 2000 was $500.
Oh, this was the stock from then. I didn't even know it was back then either.
Yeah. If you go back,
the buy. So you just think about that. We keep giving examples like that. People think that only stocks go up, and there was a lot of stocks that never came back. Here's another one from the year 2000. If you want to scroll all the way back, I guess we're not going quite far enough because 2010 there. Joel's going farther, but just to give you a perspective, and you're buying in bubbles. Sometimes you just you were doing it, and then
I'm doing it, and then I know. Just like when my mouse is acting funky here, I'll get it.
Okay, Joel.
What do they do? What do they do?
It's LiDAR. So they actually did have news. I don't think the news is matters so much for the movement of the stock as people might think it might. But that they had a headline this morning that they completed the development of their so basically what they do is LiDAR, right? LiDAR sensors, and they completed the development of their long range sensor hardware, basically. So now they have to sell it, I guess. But so that was the PR that was out this morning on MVIS, but more interested in the round trip it made in the last 2 days than I am in that headline. What about Tesla here?
I knew you were going to say, yep.
Yeah. Yep. Gordon Johnson noted this morning. So there was a 10Q out overnight. Gordon Johnson, longtime friend of the show, noted that they added a new disclosure that they may never achieve full self-driving. Also, they disclosed that the EPA had hit them up saying, "Hey, you guys didn't comply with some regulations," so they're talking to the EPA about that. By the way, if you've never read the if you've never checked out like a Tesla 10Q, they are by far the most interesting 10Qs.
I didn't give you props on this tweet, but I tweeted out what you told me on the pre-market show, so I'm gonna give you props right now. Spencer Israel found this in the 10Q, which is just.
But I don't know if this is new. It might not be new.
It might not be new, but it's fun to read. It says we are highly dependent on the services of Elon Musk, techno king of Tesla. He calls himself techno king of Tesla. That's ridiculous in itself. Well, it almost seems like a joke in there when he calls himself techno king of Tesla.
Well,
and our chief.
Yeah, I mean that's not new, but what
Techno King?
Yeah, that's not new.
The company calls him Techno King?
Oh, he calls himself that. That's his official job title. Okay, wait. We are highly dependent on the services of Elon Musk. Although Mr. Musk spends significant time with Tesla and is highly active in our management, he does not devote his full time and attention to Tesla. Obviously, he does SpaceX and 10,000 other things. He does
and Saturday Night Live.
Right. But I don't know. I just never seen a company been like, maybe this isn't new, but I saw it today for the first time. And I was like, damn, they're like, yeah, without Elon, we're in trouble.
They're in trouble. They're just saying he's doing a lot of other things, and maybe he doesn't give us much attention as he should. Maybe. And that's a risk if he decides that this is more interesting than Tesla, and we know he's all about interesting. SpaceX is pretty interesting company that might be a little less attention.
What do you think? It didn't go up off earnings here. Now back under 700. Man, oh man, that's just not a good. I think the only thing that's going to save this would be like an Adam Jonas. Best case scenario 950. Worst case scenario 350. Some kind of analyst coming in and doing this because it turned, and earnings are very important fundamental. I don't know. Not liking the chart. Not liking the pre-market trading.
Well, it had a nice rally. I mean, you got
rally.
slammed from 900 down to 550, and it started coming back. It's hard for them once they start getting up. We talked about it. 750, 800. It's going to start thickening up. So the path of least resistance starts to look lower again. And we tried multiple times to get over 750. Getting over. Getting over. I can't get over it. And we're rolling over now. So, I mean, now it starts to roll over. Now you think, okay, there's people caught in this again. Everybody who bought this in the last 2 weeks is now caught in it again. So you have new bag holders, what I was talking about on the show yesterday. This is how the tech bubble burst. There was a lot of bag holders who originally bought in February, January, February, March, of 2000. And then we got hit hard in March of 2000. And then we came back in the summer and everybody's like, oh, we're going to go make new highs. Oh, no, we just created a whole bunch more bag holders to take us farther lower. And I do believe that you're going to see this. I don't know if Tesla's a stock, but Tesla fits the bill. I mean, it's a storied stock. Story has carried this for a long time. And valuation's insane. So, I mean, it fits the script from one of those stocks where the bubble has already burst. And, I've tried to call the top on this before, and it's difficult to do. But, that 900 is going to be trouble to get back there. Is it reasonable to think that Tesla could get back to 900? Maybe if the story gets hot again. But competition coming. We've talked about all these things. Valuation's crazy. And You've got stuff in the 10. He does a lot of things. I mean, we've talked about this before, too. Elon Musk is SpaceX is I think it's way cooler than Tesla, to be honest with you. And he's all about, Mars. I want to die on Mars, he said. So there's going to be a lot of his focus in the future is definitely still going to be on SpaceX, and maybe the majority of his focus. So that's a concern too. So I just don't think, this Tesla $3,000 ARC Lady target, I don't know if it's, the first one she hit, but, like Gil said, did she get lucky or was it skilled? Was it the perfect storm where it was a hated stock shorted by everyone in the world? And that really drove it. I mean, it started as a short squeeze, the Tesla, and then the story just carried it. And then we've got the EV, and EV's going. I mean, the next run from 700 to 3,000, I don't think is going to be nearly as easy because one, the short interest is now very low. You have, the Einhorns and everyone who said the valuation's nuts got run over on it. It's not going to be as easy going up now. It's not easy sledding. So I actually think this path of least resistance for Tesla is lower. Now, a day like this is, when it just lost 60 points in 2 days is not the day to go short. You got to sell. If you have a thesis that you think a stock is going lower, you're selling into rips. You're not selling into dips. So, people will say, bounce to 710 tomorrow, and they'll say, oh, you're an idiot and you were wrong. I'm saying that, from a longer term perspective, I'd be a seller of rips on Tesla, not selling it 10 points in the hole today. I don't know, it might continue to go lower, but I'm looking at opportunities to sell short on rips.
What day was that added to the S&P? Do you remember? Because it had the split, then it had the add to the S&P.
It was 695, I think, was the closing price that day, though. So we were right here at S&P ad price.
Okay, interesting.
So I'm even, I guess I bought Tesla. I own a pile of SPY. I guess I bought Tesla at 695.
I think it was December 20th. December 20th, I think.
So this is a big reference area. I think more. And a lot of times people are like, oh, is it going to 3,000? Oh, is it going to 500? This thing could just grind. You could grind, it's 700 to 750. Now maybe a grind 650 to 700, and then, until it takes out this monthly low right at 540. Did it get down there? Yeah, 540. So that's a ways down there. But I don't think, just trading range. Stocks can be in trading ranges. They don't have to always break out or break down. All right, Spencer, 9:05. We're keeping you late.
Somehow we didn't cover nearly as many
Boeing. We didn't cover Boeing
as we would have liked to. I'm going to run through a few of them now, and we'll cover more throughout the day, I'm sure. But guys, go ahead and smash a like for Dennis, for Joel, for Gil Morales. Fantastic stuff. We do have clips already up on the Benzinga Clips YouTube channel. So check it out there. It's Benzinga Clips on YouTube. It's where we're posting all of our highlights from all of our shows, this one included. Check it out. All right, guys.
Quick imbalance look for you, because we should start doing that, because this is stuff that actually does move price. The imbalances in the morning, not enough people look at them, and they should, because they do influence price. You got a lot of buy imbalances in some of the pharmaceutical stocks. Merck, 81,000 to buy. Pfizer, 87,000 to buy. AT&T, 200,000 to buy. Kramer gave love. Last night, he ran a segment on dividend stocks and saying, with the new Biden taxing, that dividend stocks might come back into favor. And all those stocks were on there. So it's curious that I'm seeing buy imbalances in all those stocks that he was featuring last night. So obviously some people listening to Jim on Mad Money. 285,000 to sell in General Electric. I don't even know if we talked about its earnings yesterday.
We did.
Ford, which was another one that Jim Cramer gave love to last night, 338,000 to buy. Definitely seeing love in the Jim Cramer mentions last night. Nike, 66,000 to buy. That's the bulk of it. Boeing, 33,000 to sell. Just saying that because of reported earnings, just to give you a feel. It is looking lower this morning.
Ford has earnings tonight. Don't forget. Also, don't forget, we didn't even mention this. We didn't even get to it. The Fed meeting today.
Oh my goodness.
Transitory is Dennis's word of the day.
Transitory is the word of the day.
We didn't even get to your transitory rant, Dennis.
Transitory is the word of the day. And somebody was saying every time they say transitory, you got to drink. So we know inflation's there, and they're going to say it's temporary. They're going to use transitory. It's okay. We don't have to raise rates because inflation is transitory. Sure, Jerome. Keep feeding us the Kool-Aid. We'll drink it.
Oh, yeah. And order more.
All right.
Oh, yeah.
Souza says, these clowns are fantastic and real. Thank you, Souza. We are fantastic and real clowns. All right. Joel, Dennis, I'll see you guys later. And I'm going to hang out here, and I have a couple of housekeeping items to address. We are doing live trading again at the open with David Green. We did it yesterday. We got some great feedback. So we're doing it again today. We said, David, people loved it. They want more. He said, okay, I'll do it again. I wasn't sure if he was gonna, but truthfully, I didn't know. I still don't really know how often he wants to do this, but he's gonna do it today again. So from 9:25 till 10:30, give or take a few minutes, David Green will be live trading right here on this channel. If you missed it yesterday, they made some great trades in. Oh God, I'm blanking on what they traded yesterday now. Let me see if I can go back and remember. They traded. Oh man, and Novavax was a big one yesterday. They traded Novavax. They looked at DMTK. They looked at Moderna. They looked at DraftKings. They looked at Disney. They looked at MVIS yesterday. They looked at Roku, AMC. So that'll be happening in a few minutes here. Live trading. This stream is going to end, and it'll redirect automatically to that stream. There might be a gap, like I might end this before 9:30 or 9:25 when David starts. But it should redirect straight to that. So you just pull it up and wait for it to start. So that's happening at 9:30 today. We are going to stick with the same thing as we did yesterday, which is SPACs Attack at 11, Power Hour from 12 to 1, Get Technical with Neil after that from 1 to 2. So that's the plan. It's going to be our new plan for now. You know, we're always experimenting, always trying new things. Couple of things on the housekeeping announcements front. The banner's up there on the screen. Enter the code YouTube20 if you go to pro.benzinga.com. That code YouTube20 will get you 20% off any Benzinga Pro subscription. There's also a free 2-week trial if you want that. That works too. But Pro is what we use here. It's what Dennis uses for his news. It's what our news desk is obviously posting to. It is a fantastic news and research tool. If you are in need of more, you want like a walkthrough, you can always just email onboarding at benzinga.com. And that goes to our onboarding team, and they can help you out there. But again, pro.benzinga.com, code YouTube20 will get you 20% off. If you have your own following on wherever, the internet, the World Wide Web, you want to become an affiliate for Benzinga Pro, meaning you get paid for sending us subscribers, you can do that. The URL to do that it's up on the screen, benzinga.partnerstack.com. Sign up to be an affiliate. You will get 30% of every new subscription that you use, basically free money for you. Every new sub that you send our way. If you haven't already, subscribe to this channel. We are only a couple people away from 100,000 subs. We do have a special plan for when we hit 100,000 subs. I'm not going to reveal what that plan is, but it involves making a mess. It involves our CEO, Jason Raznick. I don't know when we're going to hit 100,000 subscribers. I hope it's this week. We're a little over 90K right now. So get us to that 100,000 hurdle, and you will see what we have in store. Very excited for that. Jason does not even know what I'm talking about, which is great. So subscribe to Benzinga on YouTube. Subscribe to Benzinga Clips if you want just highlights of our stuff, which we're also posting to Twitter and across the social webs. So check out those two channels. What else did I want to say? Interviews. Thank you, Mitch. A couple interviews. SPACs Attack has a good one today. They're talking to the CEO and CFO of ATI. There we go. Physical. That's the company that is merging with FAII. That's the SPAC ticker, FAII. ATI Physical Therapy is the company. The CEO and CFO will be on at 11:15 Eastern time today on SPACs Attack. So check that out. I think that was it. That I had. I know we didn't cover more earnings. I'm sorry. I really do try, but you guys know how it's hard with those two. It's hard for me to corral them, which is fine. We didn't talk about Boeing. We didn't talk about Spotify. We didn't talk about Starbucks or Amgen. We didn't talk about Apple or Facebook tonight. That's okay. We will cover more throughout the day, just to again bring up that schedule on the earnings front. So you can see tonight, eBay, Apple, Facebook, Grubhub, Qualcomm, Ford is tonight. We'll cover as many of them as we can. Tonight and tomorrow morning is the top of the earnings season, essentially, in terms of quantity. There are, I think, I pulled up the stat a couple of days ago. There's over 300 companies reporting in this one overnight from tonight till tomorrow morning. There's over 340 companies reporting. So this is the top of the earnings season as far as quantity. So we got a lot to discuss. We'll try to cover as many of them as we can. I know we didn't even get to ticker time. I'm sorry. We did breach the 50% threshold. which is my bogey every day. We're at 800 likes, and we peaked. We're right now we're at 1,400 concurrents. So thank you very much for that. I'm sorry we didn't get to ticker time. We will do more tickers throughout the day, but also at the close show, which starts at 3:30. Maybe I'll start a few minutes earlier, and we'll do ticker time there. But thank you, Matt. Email, appreciate that. Everyone, smash like if you haven't already. I'm gonna hop, and as I said, we're gonna go live with David Green in about 10 minutes. He's gonna be trading. He's not really gonna be taking like tickers from the chat. It's not really like that kind of a show. So if you have a ticker you want him to look at, maybe he'll like discuss it at the end. But he's just locked in on what he's doing and what the people in his room are doing, and and you can just watch him do it. Now on the David Green front, we got a lot of emails yesterday asking for the discount code for his trading course. We have that set up. They would talk about it. We got, I think, like 55 emails about that yesterday. So I'm going to let David and producer AB just handle that and tell you the details when that stream starts in 10 minutes here. But there is a code set up to get a discount to David Green's trading course. That's Wall Street Global Trading Academy. So stay tuned for more info on that. Reminder, Fed meeting 2:00. Don't forget, could be market moving, could be nothing burger. I don't know. No idea. Okay, that's a wrap for me. I'm done now. I will see you later on in the stream, I'm sure. You're not going to be a stranger. But I'm going to hop, and I'll be tuning into David Green in about 10 minutes. Everyone have a good rest of your morning. Have a good open.